Hey, Steve Saretsky here. As always, there's going to be some links in the description below that go with everything that I'm saying here, so you can have some sort of graphs, data to go with it. This is the Friday recap video. We're basically, again, recapping everything that's happening in the Vancouver real estate market, in Canadian real estate, anything that sort of might have any influence on the market. This is where I basically recap every Friday of what's going on. So if you like this show, basically, you know, I appreciate if you hit subscribe, thumbs up, whatever. It all helps. Comment below as well. I want to hear your engagement. I want to talk to you. Yeah, so I mean, like, basically, I think first and foremost, obviously, some big news. The Bank of Canada came out with a rate hike just the other day. You know, another 25 basis points. So a lot of people just say, oh, okay, well, you know, who cares? It's 25 basis points. That's nothing. But I think what's important to remember is in an environment where interest rates, again, are at all-time historic lows, we have effectively doubled the interest rate in the past 6 months or 4 months or whatever it is. I think they hiked in July. It was the first time in 7 years. So you've gone from 0.5% to now 1%. So you've literally doubled your interest rate increase in the past few months. So I think that is already substantial. Obviously, the amount of debt that Canadians have, the cost to obviously service that debt continues to increase. You know, the cost of, you know, a home equity line of credit, I believe, increased 25 basis points along with the Bank of Canada interest rate hike. Of course, variable rate mortgages went up, and then your fixed term, which again is tied to the Canadian 5-year bond yield. So if you want to see where fixed term mortgage rates are going to go, or where they're going, is you have to watch the Canadian 5-year bond yield. That's basically pretty much directly tied to where that 5-year fix is going. So the Canadian 5-year bond is up, I believe, 75 basis points in the last 90 days. So again, pretty substantial considering how low interest rates are. You know, 75 basis points starts to creep up. So we saw the big banks hike. You know, the 5-year fix is sort of hovering around 3.2% right now. Sort of substantial. And that's really, you know, the case. I think that when you have the GDP growth at 4.6, now I think, again, the underlying data behind that is really not that strong. It's a lot of it's just tied to real estate. But when you have that sort of growth, there's no reason for them not to hike. And we know we could see another one here before 2018's up. I don't know. I think that's really a guessing game. I think a lot of people don't really know what the Bank of Canada is doing. You know, they're catching a lot of people off guard, essentially. So that would be one. I think the second thing I basically wanted to touch on is I warned you guys all of this, you know, in my last video and the August update of what was going to happen when these industry reports start to come out, headlines start to come out, that, you know, year over year, so when you're comparing August 2017 to August 2016, that, you know, sales numbers were going to be strong, they're going to be stronger, prices are going to be up, et cetera, because what's happening is you're comparing this August to last August, where you had a 15% foreign buyers tax introduced into the market, which of course instantly shocked the market. You know, sales dropped off like 50% in 1 month. Prices got slashed 10-15% because buyers were instantly expecting a cheaper market. It was like a knee-jerk reaction where it really is like a once-in-a-lifetime policy, essentially. You know, we've never seen anything like it before. So when you compare these numbers, you're just taking 1 month, comparing it to another month on a year-over-year basis. So again, it's sort of misleading, and this is something that I warned about. So I think, you know, unfortunately, a lot of people are going to read into those headlines and think that the market's in a much stronger position, but really it is again, I keep stressing this, it's in two entirely different markets. You have, you know, the detached market on one hand, you have the condo market on the other. Just go on my site. I just posted this blog today, but what I did is, to put it into a better context, comparing 1 month versus 1 month, what I've done is I've taken from January 1st to August 31st, 2017. So you have a full 8-month window there of sales data, and I've compared those numbers of January 1st to August 31st over the past, I believe, 7 years I went back. So from 2010 to 2017, what was the average sales price and median sales price for those years and those given months, and then what was the total dollar volume, so the amount spent on Vancouver real estate. So what you can see is some very interesting trend lines. This basically goes with everything that we're saying, seeing is we saw basically in the detached market is basically from 2010, you had a slight dip in 2012, and then you had a huge roar up, basically starting in 2014, 2015, right up. And so in the detached market, you saw dollar volumes climb, and then each year you saw the average and the median sale price go up every single year, except for that tiny little dip in 2012 that we had. And so basically now if you look at it from a year-over-year perspective, again, this is taking January to August 31st, comparing back to 2016 of January to August 31st, 2016. So you have a full 8 months that you're comparing to, and then using historical data to go back further. So the total dollar volume in Vancouver detached market and this 8-month frame today is down 36%. So the amount of money spent on the Vancouver detached market this year is down 36%. And the average sales price, I believe, was down 9%, and the median was down 15%. So you have, in the Vancouver detached market, again, you had last really 7 years, you had rising average prices, median prices year over year, and you had rising dollar volumes. Now you have dollar volumes collapsing 36%, and you have the average and median sales price down, again, between 9 to 15%, give or take. So let's just call it 10%. That's where the detached market is today. Now, again, you can try to argue that it's skewed from the higher end. It's certainly more of the softness is coming from that multi-million-dollar detached segment that tends to favor the foreign capital coming in and buying it, which is clearly, which I've been saying, has dried up. And so that's substantial, right? Like, I would say that that's the detached market in the midst of a correction. Like, you simply can't argue it and look from a data perspective and say, okay, again, dollar volume's down that much, prices down with it. This is a market that is soft right now. And then you switch over to basically the condo market, and again, this is a market that I've said has continued to increase on a month-over-month basis. The dollar volumes actually fell, interesting enough, I believe 4%. So it's sort of a blip, but the average sales price is up. Average and median are up about 10% on a year-to-date basis. And it's a similar thing with the townhouse market. I think average and median is up about 10%. And you have dollar volumes actually up about 3%. So again, those two markets are basically the same. Dollar volumes again have been trending up. The average has been trending up. And this is a huge concentration into that attached market. Again, you have a huge concentration of first-time buyers and a lot of people that are leveraging existing equity in the market to buy second and third properties. This is now what is the locals market, where again you have people that are looking to get into the market. They're trying to get in, and this is still what's relatively affordable. And so if you actually look at it, it's very, very interesting just to see this sort of get-in mentality. Vancouver condo inventory for one bedrooms is down 52% year over year because everybody is just bidding up one bedrooms. Nobody wants to sell them. Everyone just wants to get in, to own it. And so you have inventory dropping 51%. Like if you're trying to buy a one bedroom basically anywhere, whether it's in Vancouver, New West, etc., it's extremely, extremely, extremely tight. And this is because you have a huge concentration of everybody just trying to get in because there's a belief that prices will continue to rise, right? And so again, agree with it, disagree with it. That's the mentality out there. I think that it's it's not a healthy mentality. Again, I think Vancouver real estate in a long-term global city, yes, it's always going to be very expensive. But again, prices going up, 20-30% several years in a row is not sustainable. But that's for another story. But basically, that's where we're at in the market. Which is a totally different thing from the detached market, right? And so it sort of brings me to another point because, again, working with first-time buyers, etc., listening to the mentality that's out there. Some of the things that like, sort of concern me, some of the valuations in the market, where when you have one bedrooms that are so in demand because everyone's just trying to get in, that the prices are just getting driven up. So you're actually going to pay basically the most. You're going to pay the highest price per square foot for those smaller one bedrooms and studios, because that's a price point. Like basically people can drive it up to, you know, 400, 450, 500,000. Like that's sort of like that threshold for those one bedrooms. Like everyone's willing to drive it up to that price because of that belief that tomorrow it will be worth more. So like I look at New Westminster. There's buildings in that area that are about 2 years old. Looking at them, some of the recent sales of the last month or two, they're getting bid up over $900 a square foot. And so for me, I mean, New West, it's, you know, I like it, dislike it. It's a central area. I think it's definitely up and coming. It's attracting a lot more younger people, SkyTrain, etc. But $900 a foot, to me, that makes no sense. That is, it does not, from a like price standpoint, from an economic standpoint, it doesn't make sense. $900 a foot could have bought you a condo in downtown Vancouver last year. You know, can't say that's last year, but you're now buying New West condos at downtown Vancouver prices a year ago. So when people thought downtown was overvalued last year, we're now bringing those prices into New Westminster. And so, I mean, don't get me wrong, you can still buy in New West and relatively newer buildings for, you know, $700 a foot. But like some of these buildings, like they don't even have views. There's one that I was looking at, no views. It went for like $920 a foot. And I got this. It's just to put it into context again, right? Is because like Vancouver, I think you can make that argument, right? You have, you know, global city, downtown Vancouver, a lot of foreign capital, obviously, you know, areas like Cole Harbour, Yaletown. You know, there's a lot of money in those areas. There's a lot of deep pockets in those areas. That's obviously where the jobs are, etc. And like, for a foreign investor, whether you're, you know, wherever you're coming from, Asia, or if you're, you know, coming from the States, if, you know, whatever, like generally they're going to come in and they're going to invest in like downtown Vancouver. Like that's, like, you don't hear of too many investors saying, oh, I want to place a New West, like they never heard of New Westminster, right? So like what that basically tells me is that the market in New Westminster, again, you can look at it, it's pretty easy to put together, but it's a very blue-collared working class that, you know, is making $60,000, $70,000, $80,000 a year, that is supporting the $900 per square foot price. Like that's not a foreign buyer coming in there, bidding it up, and like, you know, it's all empty towers. Like either these are like local investors that are, again, sort of like speculating on higher prices, leveraging current equity, whatever, and it's first time buyers. So like, again, it's very interesting. I think it reaches a certain threshold where it doesn't make sense. Someone emailed me the other day asking about Wall Center, which is in Collingwood area in Vancouver. It's basically Burnaby. It's kind of in between. It's kind of in no man's land. You know, again, you can argue because the SkyTrain is sort of an up and coming area, some new construction going on there. But you know, that Wall Center, for these smaller one bedrooms, like, you know, 2 bedrooms you can get in at sort of $900 a foot, because it starts to reach that price threshold, right, where like locals are not willing, they can't afford. But that, you know, for that, if you're looking at like under 600 square feet in that building, in that Collingwood area, in the new Wall Center that just, you know, just completed, move-in ready, they're going about $1,000 a square foot. Like, again, that was downtown. That was basically like, you know, you could have bought in at downtown last year in like a pretty decent building for $1,000 a foot. So I think that you're bringing that $1,000 into Collingwood, and you're bringing that $1,000 into New West, where again, that's generally a concentration of like hardworking people. There's less foreign speculation there in those markets. To me, that's just an intriguing factor. I look at it and I go, okay, if New West today is at $900 a foot, if you're telling me New West is $900 a foot, to me that's like, wow, that seems to me, I don't know how any locals can afford that based on incomes, but you know, again, you can argue whatever you want. I'm just looking, I always tell like people, like, you know what I mean, like if you're gonna buy, like plan to live in it, like long term, whole primary residence, everyone needs a roof over your head, I get it. But I think this is what happens when you're in sort of this speculative mania where people are essentially willing to pay any price because there's a pre-existing assumption that prices will be higher a day from now or a month from now or a year from now. So it's like, pay it today, don't worry about it, it'll be higher next year. But like, what is the threshold for new West? If it's 900 today, does it become 1,000 next year? 1,100, 1,200? Like, does it become 1,200 a foot in a year and a half? I don't know, maybe, but like, how are we supporting those prices? That's the curiosity. So the leverage, the household debt, I guess, will continue to rise and bring that into the stratosphere. But just looking at value plays, right? Like, you know, if you're going to go into New West, I mean, again, you can buy into buildings 600-700 a foot. If you're going to do that, if you want into New West, go into those buildings. I just don't think that New West, that value at 900, to me, today's market doesn't make sense. Same thing for Collingwood, right? I just sold a building in Collingwood, you know, 11-year-old Dosa building, you know, 2-3 weeks ago. I sold in at 700 a foot. Or do you go and spend 1,000 a foot in you know, a brand new building? I just don't know if the value is there. You know, people can debate away, but I'm just looking at fundamentals, right? Like, go on realtor.ca, go on realtor.com today, go on Zillow.com, you know, go look at, you know, people like to compare Vancouver to New York, and I know how ludicrous that argument is from an economic standpoint, you know, up to interpretation in terms of the beauty of the city or whatever global city that, you know, you can sort of argue those characteristics from like an economic standpoint. The amount of money that's made, you know, the economy of New York alone is the same GDP as all of Russia, is massive. Brooklyn, you can buy in Brooklyn in like a newer building in the Brooklyn area for about $800 to $900, about $800 to $1,000 a foot USD in Brooklyn. So that's like the Brooklyn going rate. So like, even if we were to hypothetically say, I know this is like this isn't like, you know, your apples to oranges, but if you were to like hypothetically say, okay, like Vancouver's like Manhattan and Brooklyn is like the New West, then they're basically equivalent now in local currencies. So, you know, you're paying 900 Canadian for New West, you're paying 900 USD in Brooklyn. Like, that to me, so, you know, we're almost basically getting past the point now where we are becoming more expensive, or from an unaffordability standpoint. Anyways, I don't want to ramble on too much. Like, I think it's just curious. These are things that I'm seeing in the market. Again, the detached market to me clearly looks like it's in, you know, definitely a full-on correction mode here. I don't know, like maybe it turns around again in spring 2018, but I think in the wintertime it'll likely continue to cool. You know, it was interesting because someone was crying over spilled milk the other day on Twitter because I called the detached market a buyer's market. That doesn't mean it's a buyer's market that you need to go out and buy. It means that from a sales active ratio standpoint, when the sales to active ratio is below 14%, when Vancouver's currently at 11%, it means it's a buyer's market. It means that in negotiations, that the leverage is in the buyer's court. You know, it favors a buyer. You can actually go in there and negotiate. It doesn't mean that it's an affordable market and that you need to go buy. If you want to, great. You're going to have some room for negotiation. Someone was crying, how dare you call it a buyer's market when, you know, a detached house still cost me $2.5 million. I don't know what to tell you. Like, if you want me to call it, like, if prices were to fall 20% tomorrow overnight, like, are we still not going to call that a buyer's market? So anyways, when I tell you that, that's just open for interpretation. It's just the wording. So yeah, that's what the detached market is. Obviously, the condo market is still going up. You know, we'll sort of keep an eye on that. I'm not sure how much more leg room it has to go. Again, when we start hitting 900 a foot, 1,000 a foot in Collingwood, etc. But both going in very different directions. Obviously, the Bank of Canada increasing their interest rates. You know, if they continue to go on this trend, again, that's if OSFI brings in a stress test. I look for that to obviously hamper some borrowers' buying capacity. borrowing capacity. And that's pretty much it. I know I basically rambled on a lot in this video. I know it was a really long video. So anyways, put it in your comments below. Any questions, comments, thoughts, you know, what are you seeing in the market? You know, again, value wise, right? Like, it's just interesting. I had, someone emailed me again. This is why I brought it up, was they were saying, well, what did you? They were actually asking about that Wall Center building in Collingwood, and I said, you know, and they're kind of debating between that and I think Olympic Village, and I said, oh, I wouldn't pay $1,000 a foot to live in Collingwood when I could pay, you know, $11.50 a foot in Olympic Village. I would just muster up the extra $150 to live in Olympic Village. Personally, again, maybe everyone's different, but I just don't see how Collingwood justifies $1,000 a foot. But who knows? Maybe next year it's $1,200 a foot. So that's where we're at. Anyways, hope that helped. Actually, you know what? I'm going to New York this 2 days from now, Brooklyn. So I'm gonna go check it out and give maybe some more insights and perspective on the market. So I'll probably follow up again next week with another Friday video, so check back in on Friday. Also, I have a Sunday. What I do is I do a newsletter every Monday morning, essentially recaps in a very short, condensed newsletter. I got a couple thousand people on there now, so if you want to join that, I'll put a link to it again in the comments below. I'd recommend it if you want to basically stay up to date, like opposed to like watching these videos or whatever, or doing both. If you want like an easy to digest, like everything that's happening in the market, that'll come to you every Monday morning. I put that together, a little tidbit there, so get on that. Anyways, hope that helped, and talk to you soon.